All right, so this is going to be just some beginner, level basics that you should understand. So I'm gonna go through a few of them, that you will definitely hear or come across throughout this course. All right, so this is just the first module where I'll be explaining the basics. All right, for the beginner traders. Cool. So you have to understand what is Forex. So Forex means foreign exchange. We just call it Forex in short. And this is basically the market where countries' monies are being traded. All right. So, just like how we trade money, we exchange money on a day-to-day basis. For example, someone has a US dollars and say, hey, I want some JMD from you. Can I sell you this US dollar so I can get the JMD for it? Then you basically, give them the JMD and you take the US dollars from them. That's pretty much it. The only thing is, it is being done online. That's it pretty much. All right. So for example, how it's done, just like how I explained, in my exchange the US dollar for Jamaican dollars, or the US dollars for Euro dollars, the British pound currency for the Swiss franc. Those are just examples of currencies that are, exchange, so that is basically what Forex is, guys. There's nothing too serious, nothing hard. Alright, so basically what is Forex trading? Now, Forex trading means buying one currency and selling another. That's pretty much it. The same thing we really explained just now. Alright, and the goal is to make money from price movement. Alright, so if you're exchanging money and the goal is to make money, for instance, let's say before you went to the US dollars, or let's say I went to the US, right? You had like a US dollars that you bought for like $140 from someone. All right, and you got a US dollars, cool. And you kept that US dollars, and when it came back, someone else wants to buy it back from you. Well, now the US dollars is worth 155, 156. So guess what? You're gonna sell it at the market value. All right, and guess what? You just made $15 right there. That's pretty much it. You make money from basically what it valued before and what it valued now. All right, that is how we make money. So we always hear the term buy low. You buy when the price is low and you sell when the price is high. That's pretty much it. All right. Currency pairs. Now you see, when you're trading the Forex market, we always trade them in pairs. In order for an exchange to happen, it has to involve two things. All right, so it has to involve two currencies when some sort of exchange is happening. Even in real life, if an exchange is supposed to happen, two persons has to be involved, two objects, something has to be exchanged for another. All right, so we have to pair them in. We have to trade them in pairs. All right, so it has to be the Euro dollar versus something else. It has to be the US dollar versus something else. So for example, Euro USD, the Euro dollar versus the USD dollars. All right, so the first currency is the base currency, which means that's the one that we're actually buying or selling. And the second currency is a quote currency. All right, now there are different type of currency pairs. We have the majors, we have the minors, and we have the exotics. So the major pairs are just the strong ones that are widely used, like the strongest currency pairs, which is like Euro dollar, Euro USD, GBP, USD. Those are like strong ones. All right, they're very valuable. The minor pairs are like, anything that is not really USD. Okay, so minor pairs are like New Zealand, Swiss franc, Japanese yen, those stuff. And you have exotic tiers plus the USD plus smaller countries like ZAR, Mexico, Jamaica. Those little stuff. All right. Now, what is buying and selling? So buy is when you buy something, you think that the price will go up. So when you're buying, you're expecting the price to go up, and when you're selling, you expect the price to go down. All right. Now, this is what we'll be doing in the market. We'll be buying and selling. So depending, if we realize that the price is going up, the market direction is up, we're going to be buying. If the market direction is down, we're going to be selling. All right. Now, long and short, this is pretty much the same thing. They just call it a different term. So I just wanted to put this in there. So long equals buy, same thing, and short equals sell. As I said, it's the same meaning, just different words. Okay. Now, candlesticks, you will see this a lot. This is what you're gonna be seeing. candlesticks now basically shows you the price movement. They show, you know, basically where candlesticks open and when it's closed. All right. So when you see a green candlestick, it means that price just went up. When you see a red candlestick, the price went down. Okay. We have buyers and sellers in the market at all times, you know. So the buyers always cause this price to push up, and the sellers cause this price to push down. So, you know, if I see a lot of, you know, buyers, which is normally like the green candlesticks, that means there's, you know, there are the ones that are pushing price up. And when you see a lot of red candlesticks, that means there's a lot of sellers, which typically means, you know, the price is going down. So when you see these, you can tell who is in control of the market at which time. Okay. Support and resistance. Now, this is important, which you will hear me say this word. All right. So support is where price usually stops falling. You know, so which means, you know, when price is falling and realize it stops to fall and starts to go up, this means price is at a support. All right. And resistance is where price usually stops rising. All right. So if you realize that price is rising and rising and rising, and then it stops and it starts to fall, that means wherever it starts to fall from, it just hit a ceiling. All right. Pretty much just like that. Now the word stop loss. So the stop loss pretty much is self-explanatory. It's stop losses. All right. So it limits your loss. So this is like an order that you're going to be placed in the market when you're placing your trades, you know, which tells you that which you're going to put in the market. So this means if price goes beyond a specific point and it hits your stop loss, that means it's going to stop it from losing what you initially was risking at the time. So if you're risking $10 and your stop loss is where that $10 is at, then you're not going to lose more than that, even if the market continues. Okay. So it closes your trade automatically, so it protects your account balance. All right. Because if you don't have a stop loss and it keeps on going the opposite direction of where you intended it for it to go, that simply means that it's just going to continue losing until you have no more money left in your account, which you do not want. So stop loss is extremely important. And you have the word take profit. It's the same thing, just vice versa. It takes profit. So take profit basically locks in the profit for you. It secures the profits that you have or you're gaining, and it closes the trade at that target. So let's say your target was to make $30, right? This simply means that when you're in profits and it reaches $30 in profits, then it will close the trade automatically for you and then secure those profits. So this prevents you from this allows you to just basically secure profits at all times. It closes, so once it hits that level where the take profit is, it closes the trade with those profits for you and secures it. All right. Now lot size. Lot size is the trade size, basically the size of your trade. All right. So you have bigger lots, which is basically when you have a bigger lot, you're typically risking more and you're going to be able to gain more. But beginners usually use small lots, which we'll be going to throughout this course. All right. Showing you how to calculate these and all of that. All right. So pips. Now you will hear the word pips, you know, maybe throughout this course. You know, pips is just the measurement of price movement. So it's a unit of measurement from point A to point B. It's like measuring distance. All right. It's the same thing. You're measuring the distance from where price was and where it's at now. Okay. So small movements equals small pips. Profit and loss are counted in pips as well, you know, when explaining it. You know, we'll explain that more. The word spread. This is not really important to know right now, but later down, if you're really getting into more depth of trading, you'll learn about spread. But I must still go ahead and explain this. Spread is just the cost of trading. This is the difference between buy and sell price. All right. So the lower the spread is better, and that is how brokers normally, you know, makes their money. Okay. Nothing too serious. Leverage. Leverage lets you trade bigger money. It increases profits and losses, so use it carefully. So when you're setting up your account, persons always ask about what leverage they should use. It doesn't really matter, honestly, you know, as long as you're calculating your risk properly. Okay, so it doesn't really matter right now. Now, how do we make money? We mentioned it before. We buy low and we sell high, or you sell high and buy back lower. Okay, And risk management is very important, so you have to manage your risk at all times. So how we make money is that when price, and price is moving in a direction, if you realize that it is going up, you want to be buying overall, but you can't just buy anywhere. You have to buy at a low point, hoping to make money from it. And it's the same thing, if you're going to be selling, you can't just sell anywhere. If you know that the market is going down, you have to sell at a high point so you make the most of it. You'll sell at the highest point, so you actually, when price is dropping, that's how you start to make money. Now, a key beginner rule that you want to understand: always use a stop loss before you enter a trade, which will be showing you how to execute your trades. Okay, you want to risk small amounts, which we'll be going through as well, and you want to focus on the learning aspect, guys. All right, not fast money. Yes, we're gonna try to make money in the 7 days, but I want you to really focus on the learning aspect and execution. All right, when I was learning trading, what I simply do is, as the moment I watch a certain video, I try to go on the charts myself and try to replicate what was happening so I can understand, and that is what I want you guys exactly to do. Now, this is just, when we're explaining candlesticks earlier, this is just a quick diagram. Now, when price is going up, you're going to see the buyers in the market, which means it's the green candlesticks. The green candlestick represents the buyers. Okay? That means price is going up, and it's the vice versa when you come on to the seller candlestick. When this is red now, that means it's going down. That means, price is going down and sellers are in control. All right. Now, support and resistance, I just wanted to show you guys a quick diagram. Resistance, as I said, is like a ceiling above your head. So anytime you see price is rising and rising, then it stops to rise and starts to fall. That means it just hit a ceiling. And it's the same thing vice versa. Support, think of it as a floor. Price is falling and falling and falling, and realize it stops to fall and starts to go back up. That means there's a floor or a support area there. So the support or the floor is where the buyers come in all the time, and the resistance or the ceiling is where the sellers come in. Okay, so a lot of sellers are up here and a lot of buyers are down here. That's just some terms that the guys need to know. As we go through the course and the next modules, you guys will learn even more. All right, so take your time to understand these. You're hearing these a lot. Don't overthink it, guys. It is basically, this is a basics course. All right, so we keep it simple. We break down what you need to know, and what is not necessary, let you know, and what you need to focus on so you can execute at the best. Okay, so I'll see you guys in the next video.